Okay, so yesterday's market, pullback, I'm sure left some of you feeling a little bit like you just stepped off a pretty crazy roller coaster.
Yeah, it can feel that way for sure.
We're going to deep dive into all those reasons behind, those swings in the U.S. stock market from Thursday, February 21st.
Right.
And we have some great insights from Smart Money AI. So we'll be able to
Also,
understand not only like what happened, but why it actually matters for you.
absolutely. And, it's like putting a puzzle together, really. You've got corporate earnings, and then you've got retail trends,
Right.
and you've got broader economic kind of anxieties all kind of playing a part here.
Yeah, and I think a good place to start with this is something that, everyone pretty much can relate to, and that's Walmart.
Sure.
They actually beat earnings expectations,
Right.
which, usually means that a stock should be going up, right?
You would think so. You would think so.
Yeah.
But their stock took quite a tumble, actually,
Uh-huh.
more than 6%.
Really?
And it's their outlook for the coming year that is really spooking investors.
So what's going on there? I mean, is even Walmart feeling like the squeeze?
It seems so.
Wow.
Their management is pointing to kind of a perfect storm of pressures,
Mm-hmm.
rising labor costs. We've got this persistent inflation, and consumers are becoming much more um, selective with their spending.
Okay.
The leisure and hospitality sector, for example, we're seeing wage growth of over 6%.
Wow.
And that's putting a real squeeze on profit margins kind of across the board.
I hadn't really considered like the impacts of these on specific sectors like that.
Yeah,
That's really insightful. And it makes you wonder like if a giant like Walmart is issuing, warnings,
right.
what does that mean for, the rest of the retail sector?
Well, think of it this way.
Okay.
When the biggest fish in the pond starts to get, kind of skittish,
Mhm.
it sends ripples throughout the entire ecosystem. You know what I mean?
Yeah.
We saw exactly that with the SPDR S&P Retail ETF, which tracks a whole basket of retail companies.
Right.
It fell almost 2% on that same day.
Wow, that's a pretty clear like sign of a broader slowdown then.
Yeah, definitely.
Huh. Does this make you rethink your own shopping habits at all?
Um,
Are you feeling any of those pressures personally?
it's certainly a reminder to be, you know, mindful
Right.
of the wider kind of economic context,
Yeah,
even in our own, day-to-day decisions.
absolutely.
Yeah.
So we've got potential like trouble in retails, but what about the financial giants? Did they kind of escape all this?
Well, even titans like Goldman Sachs and JPMorgan Chase saw significant stock drops, roughly 4% each.
4% for those heavy hitters?
Yeah,
That's got to be a big deal.
that's a big deal.
What's making investors so nervous about them?
So a few things, actually.
Okay.
Rising interest rates are a major concern.
Mm-hmm.
When the Fed raises rates, it's kind of like tapping the brakes on the economy a little bit.
Okay.
Makes borrowing more expensive, right, to
Mm-hmm.
cool down inflation, but it can also potentially slow growth.
Right.
And that makes investors, you know, a bit risk averse.
Interesting. So even though like banks are in the business of, lending money,
Right,
which could, benefit from those higher rates,
right, right.
the overall like economic uncertainty is outweighing that.
Precisely. And to add to their woes, there's been a lot of chatter about potential changes to regulations
Uh-huh.
that could impact the financial sector.
Yeah.
And, whenever there's uncertainty about the rules of the game, investors get a little skittish,
Right.
pull back a little bit.
Yeah. It's hard to plan when you don't know what's coming next.
Exactly.
Speaking of uncertainty, are President Trump's proposed tariffs still a factor in all this?
Definitely. The possibility of a trade war or even just increased trade tensions can really throw a wrench in things.
Yeah.
Tariff could lead to higher prices for businesses and consumers alike,
Right.
potentially squeezing those profit margins even further.
So not only are voices like facing higher costs for materials,
Right.
but we could also end up like paying more for just about everything.
It's a real concern.
Wow.
Think about, how many products you use on a daily basis that rely on global supply chains.
Yeah, my phone, my clothes,
Exactly.
even like the food I eat, it's pretty much everything.
It is.
My wallet is definitely going to feel this, huh?
It's certainly possible. And remember, it's not just about, the direct cost of goods.
Okay.
Tariffs can disrupt those complex global supply chains that businesses rely on, leading to delays,
Oh, right, right.
and potentially even shortages.
Okay, so tariffs are one it's policy change that's got people on edge. But
Sure.
what other like policy shifts should we be keeping an eye on?
Well, tariffs are just one piece in the puzzle.
Right.
Changes to tax laws, environmental regulations, healthcare policies,
Yeah.
anything that impacts the business environment
Mm-hmm.
can create uncertainty for
It
investors.
makes sense, yeah. When the rules of the game keep changing, it's hard for businesses to like plan for the future, and investors really hate uncertainty.
They do. They absolutely do.
And what's fascinating here is that we've talked about all these, kind of negative factors driving the market down,
Sure.
but there are also some positive things happening in the economy
Right.
that we need to consider.
Absolutely.
Yeah, I did read that like the S&P 500 and the Nasdaq were actually hitting record highs
Yeah,
earlier this year before this recent pullback.
exactly.
Yeah.
And that's because some of the fundamental economic indicators are actually quite strong.
Okay.
Unemployment is still relatively low.
Mm-hmm.
Consumer confidence is high.
Yeah.
People are still spending money,
Right.
which is good for businesses.
So it's not all like doom and gloom.
No, no, no.
There's still reason for optimism.
Absolutely. It's all about perspective, really.
Right.
Some people look at the current situation and they see a whole bunch of risks,
Mm-hmm.
while others are focusing on those positive signs
Right.
and they're feeling more confident.
It's like that classic question, is the glass half full or half empty?
Exactly.
Yeah.
That's a great way to put it.
Speaking of different perspectives, I understand we have some insights from experts
We do.
with differing views on the market.
Yes. John Smith,
Okay.
Chief Investment Officer at XYZ Capital,
Mm-hmm.
is feeling pretty bullish.
Okay.
While Jane Doe, a senior economist at ABC Investments,
Okay.
is taking a more cautious approach.
Okay. I'm curious to hear what they have to say.
It'll be interesting.
Mm.
So John Smith, he says, and I quote, while we're seeing some volatility in the short term, the underlying fundamentals of the economy remain strong.
Okay.
Corporate earnings are solid,
Mm-hmm.
unemployment is low, and consumer confidence is high.
Right.
These factors should continue to support the markets over the medium to long term.
So he's looking at like the bigger picture and focusing on, those strong fundamentals.
Right.
I get that. But then we have Jane Doe.
Yeah.
And she's not quite so optimistic.
Right, Jane, cautions that there are a lot of unknowns right now, from
Mhm.
trade policy to inflation to geopolitical tensions.
Yeah.
Investors need to be prepared for increased volatility
Okay.
and the possibility of further downside in the near term.
Okay, so she's acknowledging those positives, but really emphasizing, those potential risks.
Right.
It's fascinating how two experts can like look at the same data
Yeah,
and come to such different conclusions.
right.
What stands out to you from their perspectives?
I think it just highlights the importance of not just reacting to the headlines,
Yeah.
but really digging into the data and understanding the forces at play.
Right.
It's about developing your own informed perspective.
I like that. Developing an informed perspective. That's what this whole deep dive is about, isn't it?
Exactly.
Okay, so we've covered a lot of ground here, from, Walmart's warning signs
Sure.
to those jitters in the financial sector.
Right.
Can we do a quick recap of the like key takeaways so far?
Absolutely. So we started with Walmart, a bellwether for the retail industry,
Yeah.
issuing a cautious outlook that sent ripples through the markets.
Mm-hmm.
They're facing rising labor costs, persistent inflation,
Yeah.
and those changing consumer habits.
Right.
And it seems they're not alone.
Right, and that rippled outwards,
Exactly.
impacting other retailers and contributing to that, broader sense of uncertainty in the market.
Yeah, absolutely.
Then we moved on to, those major financial institutions,
Right.
Goldman Sachs, JPMorgan Chase,
Yeah,
experiencing those significant stock drops.
right.
And those drops are largely driven by, worries about rising interest rates.
Right.
And the potential for regulatory changes.
Exactly.
And of course, we can't forget about President Trump's proposed tariffs,
Of course.
which could disrupt global trade
Yeah.
and potentially lead to higher prices for both businesses and consumers.
Right.
Plus, there's, all those other policy changes happening kind of in the background,
Right.
from taxes to environmental regulation that are
Exactly.
create that sense of, unease among investors.
Absolutely. Yeah.
It's a lot to take in, but you're right,
Yeah.
knowledge is power.
It is.
The more we understand about these factors, the better equipped we'll be to like navigate the market's, ups and downs.
Exactly. And it's not just about understanding the market as a whole.
Okay.
It's about connecting it to your own financial strategies and outlook.
That's a great point. So
Yeah.
connecting this to like the bigger picture, what does all of this mean for the average investor out there?
It means we're in a dynamic environment
Okay.
where things can change quickly, and staying informed and being adaptable are key.
Right.
Now more than ever,
Yeah.
it's essential to have a well-diversified portfolio
Okay.
that can weather market volatility.
Diversification, we hear that a lot, but it's worth like repeating.
It is. It is.
It's about, not putting all your eggs in one basket, right?
Exactly. By spreading your investments,
Yeah.
across different asset classes, industries,
Right.
geographic regions,
Mm-hmm.
you reduce your exposure to any one particular risk.
So if like one part of the market takes a hit,
Right.
the other parts can help,
Yeah.
cushion the blow.
Exactly.
It's like a safety net for your investments.
That's a great way to put it.
And it's not just about diversifying your assets, it's also
Uh-huh.
about diversifying, your sources of information.
That's right.
Seeking out those diverse perspectives that we were, talking about earlier.
Exactly.
Okay, that makes sense.
Yeah.
Now we've talked a lot about the external factors
Sure.
impacting the market.
Sure.
Corporate earnings,
Right.
interest rates, policy changes.
Mm-hmm.
But what about like the human element?
Yeah.
How do fear and greed like factor into all this?
That's a crucial aspect that
Mhm.
often gets overlooked, actually.
Right.
Fear and greed, powerful emotions
Mm-hmm.
that can really drive market behavior.
Right.
When investors are feeling greedy,
Yeah.
they tend to big up asset prices, create
Mhm.
bubbles.
Right.
But when fear takes over, they can sell off those same assets in a panic,
Right.
leading to, crashes.
It's like a pendulum swinging back and forth between those two extremes.
Exactly. And it's important to be aware of these emotional swings,
Right. Right.
so that you don't get caught up in the hype or the panic.
Don't let your emotions,
Right.
dictate your investment decisions.
Absolutely.
Make those choices based on, your own goals and risk tolerance.
Exactly.
So given everything we've discussed, what steps might someone take to adapt their financial strategies or their overall outlook on the market?
That's a question that only you can answer.
Right.
But hopefully this deep dive has provided some valuable insights
Yeah.
to help you along the way.
Yeah, it really has. This whole deep dive has given me a lot to think about in terms of my own portfolio and risk tolerance.
Right.
But before we wrap up, I'm curious about something we've talked about, like the market as a whole.
Right.
But how can investors assess the risks and opportunities of a specific company
Mhm.
in this environment?
That's where the real detective work comes in,
Okay.
You've got to go beyond those big economic trends
Right.
and really dig into, the specifics of a company's business model,
Right.
their management team, their financials, and
Yeah.
their competitive landscape.
So it's about understanding how these like macro trends that we've been talking about
Right.
actually play out at the micro level.
Exactly. For example, let's say you're considering investing in a company that relies heavily on imported materials.
Okay.
You'd want to think pretty critically about how those potential tariffs might impact their costs and profitability.
And on the flip side, you might look for companies that could, benefit from some of these trends.
Right.
Like those with a strong like domestic focus, or
Yeah.
those offering products and services that are still in high demand, even with all these economic pressures.
I see what you mean. It's all about finding those companies that are adaptable and resilient.
Right.
Those that can navigate the challenges
Yeah.
and capitalize on those, opportunities that inevitably arise in a dynamic market.
So it's a bit like being like an explorer,
Yeah.
like mapping out the terrain, charting your own course through this ever-changing landscape.
That's a great analogy. And
Yeah.
it highlights the importance of staying informed, staying engaged,
Hmm.
always being willing to learn
Yeah.
and adapt.
This has been incredibly insightful. I feel like I have a much better grasp of the forces at play in the market
Good.
and a clearer sense of how to, approach my own investments.
I'm glad to hear that.
Yeah, well, remember, knowledge is power, especially when it comes to navigating all this uncertainty.
Absolutely.
So to our listeners out there,
Yeah.
we hope this deep dive has given you, some valuable insights
Definitely.
and a renewed sense of confidence as you navigate all these market fluctuations.
Mm-hmm.
Don't be afraid to ask those tough questions.
That's right.
Do your own research.
Exactly.
And seek out those diverse perspectives.
Absolutely. And never lose that sense of curiosity.
Yeah.
The more you understand the market, the better prepared you'll be to weather the storms
Right.
and seize the opportunities that come your way.
Well said.
Thanks for joining us for this deep dive.
Yeah, and until next time, stay curious and keep learning.